Hi guys, welcome back to Financial Markets. Hope you're all doing well. So today's video, I'm going to talk to you a little bit about where I think you should be trading, where I think you should be parking some money, and where I think you should be actively looking in what asset class. Because obviously right now markets are in a complete turmoil. So we've had obviously this big coronavirus outbreak into the financial markets, and we've just literally had a hang in the world indices. We have it in the S&P 500, we have it in the Eurostox. Eurostox is gone completely wild, in the sense if you go back to Eurostox, you're at levels that you last saw in like 2013ish. You've had FTSE collapse completely, FTSE 100. Oops. And so it's a completely liquidity issue driven market. So if you see the VIX, the VIX spot is now trading at 57. It was at 72 at one point. And so what's happened? You're having a complete dislocation in the market. It's not even that now it's a coronavirus problem. It's more about there is a lack of liquidity within the system, and now you're having everyone. Obviously, if you guys understand a bit, about financial markets, you'll know when you trade through futures, options, and so on. And what's happening with all the big major funds, pension funds, insurance companies, they're all having to now pay up bigger margins because they've bought into the market through futures, and now because the markets are collapsing, banks are now asking for more money to keep hold of those positions. And so you've had a complete dislocation in the marketplace where it's just completely liquidity driven play, and because of that we've had this complete whipsaw. And so if you saw the S&P on Friday, so if you look at the last 5 days, you see it's insane the way you've had the movement in the S&P. And so what I completely suggest from everyone, don't try to be a hero in this market, and don't try to catch a falling knife, and don't try to, don't keep convincing yourself this is the bottom, this is the bottom, let's buy into the market, because it's very difficult to do so. So one asset class that I'm particularly looking at is in the FX space. So there are a couple of trades that are really, really useful and really important to think about. So number one of them being basically what I'm looking at is euro dollar, but dollars in general. So dollar had a bit of if you see here, euro rallied and you had a dollar weakness. And what usually happens during a crisis like this, everybody finds safety within US dollars. And so for me, this was a dislocation in the market, and I took an opportunity of this. I think I went about short here, so I sold my euros and I bought dollars. And so I went and short the market around this level here, and actually it's paid off fairly well. I have done decent on it. I didn't get that big of a size, which sucks, but nevertheless, profit is profit. And so dollars is one trade that I think people should now start looking to be in. You can look at it against different currencies. I particularly like against the euro because I think euro is a complete dog shit currency, to be completely honest. But there are lots of other opportunities you can do. Dollar CAD is one I've been looking at. I exited this position actually on Thursday or Friday morning actually. It's had a nice big rally. There's been a big problem with Canada in terms of they are a quite resource-based economy, and because of oil collapsation, it actually negatively affects the Canadian economy, which is why I went short CAD and then long dollars conversely. So I'm in the euro dollar play, and the dollars in general. If you have a look at the dollar index, so this is a basket of dollars against a couple of currencies. So it's against the yen, euros, CAD, I think even sterling, and so baskets is a member average weighted sort of index. And so you can give an indication. See, if you see here, look, dollar weakened really badly, and I took this opportunity to get into long dollars. And so I'm still very, very, very bullish on dollars, and so that's probably a play to go into. And it's better to go into the FX space because now you're getting some volume in the FX space, which is quite good. But also the fact that you could use this opportunity to you can stay out of the equity market, basically, is my point, because they're complete liquidity problems, so you don't want to go and chase those markets. And so you can play a bit more FX plays right now, and that will provide a better opportunity than being in the equity space or in the bond space. So that's one trade I really like, euro dollars, so sell euro dollars. And another trade I really do like is I got in on Friday, so I just entered this position, is I'm long sterling against euros. And if you see here what's happened to sterling, it's been more of a euro story, to be honest, than a sterling weakness. People are just buying euros like crazy. I'm really not a big bull on euros. We're at 8% correction, and I am very, very confident that euros is a currency I don't want to be in. The only reason why euro has strengthened recently is because of the fact there has been the carry has now narrowed, so people have sold or bought euro dollars a lot too, because now there's a lower interest rate in the US, so the carry trade that they were in for, they're now unwinding it, and so there's a lot of unwinding going on. And also because the European Central Bank haven't actually done any monetary policy, i.e. they haven't lowered rates. So we've had the US lower 50 bips, did a 50 big rate cut, and we also had UK, and so that's conversely helped the euro to do fairly good. But I still, but the reality is the European economy is under big turmoil, and you can just see that through the banks. It's a good indication to have a look at. So if you have a look at the banking index, I think it's XX70, yeah. So the Euro banking index, if you see here, the European banking index is just completely collapsed. And so naturally that gives to give you a good indication of how the economy is doing in, say, Europe. And I'm definitely a bit more a long sterling bull, and so I've entered this trade on Friday. So I think, yeah, potentially there could be more weakness, but it is something to start getting interesting and look at. And so yeah, so I think these are the stuff that you should now be looking at, rather than trying to play the game of being in equities or bonds where it's just too dislocated. And naturally this is a moment where vol is there, so you can make money, but you just have to be in the right places. And so that's why those are my two definitely recommended trades to have a look at. Again, every decision I give or every view I make, it's where I think, and I'm not, I don't have a crystal ball, so it's just I'm giving you my interpretation of what I think. But your job is to go and then do some work and see if you agree with the thesis or not, and then deploy capital. But yeah, those are my two really likable trades right now. So short euro dollars and long sterling against euro. Let me know what your thoughts are, any views, how you're doing in this market. Write comments below, subscribe, and I look forward to seeing you guys in the next one. Bye.